Hello, everyone, and welcome along to this live webinar of Lendlord and Rent Panda together. If you are watching this on our YouTube channel, feel free to subscribe to our channel to get more relevant content. And join me today, Hart from Rent Panda. Hi, Hart. How are you?
Wonderful. How are you doing?
Yeah, great. Everything is great. So we'll start perhaps with a brief introduction. I introduce myself, and then I will let Hart introduce himself and also speak about the main topic of this webinar. So I'm Aviram, co-founder and CEO of Lendlord. Lendlord is a platform that helps property investors and landlords to do mainly three things. One, to invest smarter using our deal analyzer. The second thing is to manage their existing portfolios in terms of data, documents, cash flow, performance tracking, and more. And the third section is finance, to basically help you find finance options. So this is like it in a brief, and I will let Hart introduce himself and Rent Panda, and then we'll go to the agenda of this webinar. Hi, Hart. Yeah.
Awesome.
Over to
Thank
you.
you for having me. And yeah, lots of familiar names on the chat. So some people here know what Rent Panda is, but I'm Hart. I'm the founder and CEO of Rent Panda. And Rent Panda is a rental company focused on helping small landlords throughout their rental journey. So we provide software for landlords that are doing everything themselves, finding their own tenants, placing their own tenants, and managing their own tenants, as well as tenant placement services and property management services, as well as paralegal services, landlord education, landlord coaching. Really what we're all about is helping small landlords be small landlords and being successful. And so we're active across all of Ontario. We do a lot of education for landlords and hopefully develop win-win partnerships across the board. Yeah.
Sounds great. And how basically the main topic of our webinar today, and I can start with basically sharing the agenda. But before I share the agenda, the main topic is what to
Yep.
do in the worst Ontario rental market in 5 years. So I let you perhaps say a few words about this, and then we'll jump into the topics.
For sure. So I think a lot of people on this call are probably from Ontario, and if not, there's a lot in the news about rent rates going through the roof and demand skyrocketing. And so the question is, why are we presenting on the worst Ontario rental market in 5 years? And the reality is we work with a lot of investors who are investing outside of the GTA, and there's a lot going on, and that has gone on in 2023 that painted a little bit of a grimmer picture, not to be all doom and gloom. But prices were going up for everyone from a cost of living perspective. Interest rates were going through the roof. Renovation costs were going through the roof. And usually that was coupled with, increased rents and increased renter demand. But through 2023, we actually saw that start to drop off. And in a lot of markets, there was oversaturation. There was lower quality tenants across the board. There was much longer times to lease out properties. And at the end of the day, rents started to come down in a lot of these markets. And we were still seeing landlords who were heavily investing and sometimes over investing in markets without a true idea of what was going on. And when we looked at the data over the last 5 years, we actually saw the worst Q4 in almost 7 years. So we wanted to change the nature of the conversation, not just be listening to the big, media pubs about how rent is going through the roof and how it's so hard to be a tenant, but really educate people on what's actually happening in some of these smaller markets and across all of Ontario. And so, yeah, we're excited to be here with you because you guys are the property analyzing experts. And we always like to, caution landlords to properly analyze a deal before getting into it, because we meet people every day who have just jumped 2 feet in and unfortunately sometimes make incorrect purchases because they're under incorrect assumptions. So yeah, that's what we're all about today.
Absolutely. It's so important to make sure that you do the analysis before you make any decision. I think this is one of the goals that cause us basically to establish Lendlord, to help property investors to make better decisions based on data, less on intuition. So I will jump into the agenda. So I will start with high-level overview about the Lendlord platform in 5 minutes or less. Then Hart, you will introduce Rent Panda. And then we will do some kind of deal analysis, live analysis on a prospect property in Ontario, and again discuss what are the things that you need to make sure that you basically analyze before you make the decision. Then I will show you how you can stress test your existing portfolio in case there might be problems with rental income, etc. And then Harty will speak about, you know, how placing new tenants in a market of low demand. Then in the end, we'll have a session for questions and answers. And again, if you have questions, feel free to put them on the chat and we'll try to answer. And of course, we do have the session of questions and answers. See, Pani asks, can we get recording? Yes, we will upload the recording to our YouTube channel, and we'll also send it over an email. We also ran a promotion today for the guys that attended to this webinar to get 30% off a premium plan of Lendlord. And Oriel and Amir will put it on the chat. If you already have a Lendlord account, you just need to add the coupon code that we will put on the chat. So let's start with Lendlord in 5 minutes. So basically, this is the Lendlord platform. It's basically very straightforward to sign up to our website. You can create your free account, and then if you want, you can upgrade to premium, but vast majority of the functionality is free to use. So as I mentioned, there are 3 sections also in the menu. The first one is Invest, and here you can find the rental analyzer for the deal analyzer for rental properties, and also a deal analyzer for flip projects. And we will do a live analysis in a few minutes. Then the manage section of the platform, this is for existing landlords that own already an existing portfolio. So the portfolio overview, basically, this is the dashboard. So here you can manage tasks that are relevant to your portfolio. You can add tasks manually, but the platform will also create tasks for you based on due dates that you manage on my portfolio. For instance, when you need to renew your insurance. And then you can also get some widgets with a summary of your portfolio, and you can also track your portfolio growth over time and the profit and loss, the cash flow basically over time. On the data management section, on my portfolio, this is the page to manage your existing properties. You can manage more than one owner. And you can also manage each owner by its own percentage. So basically to see, for instance, the equity level of each owner. And when you add or edit a new property, you will get this pop-up. So basically we store, I think, more than 100 different data items for each property. There are no mandatory fields. So you can start with just typing the address and some basic data, and then you can enhance and tweak the data afterwards. And any date that you put on a property will create a notification for you to get a reminder that you have an action to do. You can also manage different views. For instance, the equity view, you can just see the address, how much equity you have in this property, and the current loan to value. And you can order by any call loan. The performance view, it will be based on your cash flow. And basically, when you click Manage Views, you can create your own view. On My Documents, you can upload documents. On the basic plan, you have 5 documents, but if you upgrade to our premium plan, which is $99 per year, and today it's 30% discount, you can manage documents on the common level for each property, for each owner. And also, if you manage your properties under companies, you can also upload documents, any document you want to the company level. And using the packages feature, which is also part of our premium plan, you can share those documents in a few clicks with any third party. Wealth Tracker is a new feature which you can also add items to basically track your wealth, not just in terms of properties, but also in other categories. So we can manage assets for the short term, long term assets and liabilities. Tenants, and this section basically will allow you to manage your tenants and tenancies, leases. You can track your rent collection using our payment schedule. You can invite your tenants to their own dashboard, which you can share files, documents with them, and they can review their payment schedule, get alerts when they need to pay the rent, or if a rent payment is overdue. They can also report maintenance issues. So if you self-manage your properties, this is a very valuable feature. The cash flow, this is the place to manage your transactions. So you can, with our premium plan, you can link your bank account, and then you can allocate your income and expense transactions. And by that, you can review your profit and loss over time for the entire portfolio or for subsets of properties. You can also manage P&L reports and expenses breakdown reports, income breakdown reports, and many other reports that can be very valuable, especially if you have an average portfolio. The interactive report is a great way to see a high-level overview of your portfolio. You can see the performance of your portfolio. You can see some metrics for the top performing properties and the worst performing properties. And you can also review your prospect properties that you analyze using our deal analyzer. And then by clicking on the background picture, you can just go property by property. You can see this property in terms of cash flow metrics and how this property ranked if you compare it to other properties on your portfolio. So this is a very nice feature to get a high-level overview of your portfolio. And the finance side, so basically now we have a mortgage search of live products with our partner from our partner HomeWise, and soon, hopefully, like during Q1, we will introduce also the ability to get finance for bridge, flip, BRR financing for short-term loans. So, so if you haven't signed up yet, feel free to use the link and sign up and get your benefit to join our premium plan with 30% off. And if you're an existing user, you can also approach us through this chat box or schedule a demo. And now I will hand over to you, Hart, for a 5-minute overview on Rent Panda. Yeah, I think you are on mute, right, Hart?
Oh, good. Yeah, I may not even need 5 minutes, so we'll do it in 2.
Right.
So for everyone on the call that doesn't know what Rent Panda is, we actually started as a tech company. So we started to build software for landlords because my brother and I were landlords, and there wasn't software like Aviram has back when we were starting out our landlording journey. So we built software for landlords to market their property, to message tenants, to book showings, to build leases. We started to talk with lots and lots of landlords, thousands of landlords, and found out that screening and placing bad tenants was the biggest problem in Ontario with the legislation that exists these days. So we started to build out screening tools for small landlords. And then after a while, landlords said, great software, but I don't have time to do it myself. I'm scared of finding the wrong tenant, even with screening tools. Can you rent out my property for me? So we started to build out a leasing division of the company. And now we do tenant placement across all of Ontario. That's from Thunder Bay in the north all the way down to Niagara in the south and Windsor in the west to Ottawa in the east. And we actually have a team of regional leasing specialists. So there's 26 people on the team, and they are in all of these regions placing high quality tenants for small to medium sized landlords across the board. We can do everything from a room rental in a basement all the way up to a full condo lease up of 100 plus units and everything in between. Really, our bread and butter is understanding the small landlord audience, so those with 1 to about 20, 30 properties. And these small landlords are the ones that have the most acute pain points when it comes to placing tenants and feeling the pain of a bad tenant. And then our journey progressed to landlords asking us to manage their properties, which we didn't do for a few years. And finally, we started to say yes to that because we had placed good tenants, and now it made sense to manage them. So now we have full service property management, again, across all of Ontario. And we really specialize, again, in the small landlord audience. So we do flat rate management, anywhere from $39 to $99 a month, depending on the property type. But the idea is to not charge a percent of monthly rent because it's not more expensive to manage a more expensive property. So we want to be fair in what we charge for property management. We want to be transparent about how we run our property management organization. And really for us, it's about creating win-win partnerships with investors and growing with them. So if you have, one property in Thunder Bay and one property in Hamilton and one property in Ottawa, you can use the same consolidated brand. You can have an experience with Rent Panda, regardless of where your properties are in Ontario, hopefully soon to be national as well. And really, it's about stewarding that journey. And so, we've got paralegal services to help out when things go wrong. We've got education for landlords that want to deepen their own, investing and landlording education. And we've got coaching as well, because some landlords want to do it all themselves, but they just need a little bit of one-on-one guidance. So it's about creating a whole ecosystem, and that's why we love these partnerships with companies like Lendlord, because the things that we don't do well, like analyzing properties and working on the investment side of things, we can still connect these quality landlords with quality services. So that's what we're all about, and yeah, excited to get into the meat and potatoes of today.
All right. Sounds great. So let's start with the analysis, the evaluation of a property. Yeah.
Let's do it.
All right. So let me share the screen again. All right. Can you see the screen? Okay. So once you have a potential deal, you started to view properties or you have an opportunity, you just need to go to the invest from the menu, click rental. Then the first thing is to type the address. So Hart, I put the address that you shared with us, like basically the area. This is it, or all right, perfect.
Yep.
Then the first thing is to start with the purchase details. So we will put the purchase price of 1,200,000. Yes. And then on the deal analyzer, you just need to put two data items, the purchase price and the expected monthly rent, which is 10,700.
Yep.
All right. Then you can see that the platform will calculate automatically for you the first three metrics and the long-term metrics based on its own assumptions. But then this is the time for you to start tweaking the data. I will start with purchase details. In this case, I don't know, Hart, if you can buy the property under market value or get some discount, so you can basically put a different market value, a higher one or a lower one in the property details. I don't know if we can keep it as it is for now. But
yeah, that was a pretty good purchase price.
it's good. But let's say that you were able to buy it under market value. So if you put a value of, I don't know, 50K more, it will impact your first year ROI. So basically you gain a property appreciation on day one, which is not always the case. And you will find people that say that if you purchase it in 1.2 million, then this is the value of the property. But just for this example, we can do it. Then you need to add the land transfer tax, which should be calculated based on the postcode. I don't know if because I didn't put the correct
Yeah.
address.
So this one would be about $40,000.
All right. Then improvement cost. So for this property, basically, it did basically require a refurbishment, yes, a renovation for this property.
Yeah.
Which was around 400K.
Yeah, roughly.
All right. Closing costs, you can do the breakdown of legal fees, appraisal costs, title insurance, but we can just put a back number of, I don't know, 10K or
Call it 15.
15. Fine.
Toronto lawyers are expensive.
Yes. And let me ask you a question, Hart. So after investing 400K, so you purchase, so in this deal, basically the purchase price was 1.2, then the improvement cost 400K. The value post renovation was still like 1.25, or like it basically improved the price, the value of the property.
It definitely would have improved the price. It probably would appraise between 1.9 and 2.1 million.
All right. So let's put 2 just to be on the safe side.
Optimistic.
All right. Optimistic. All right.
Yeah.
So,
No, that's conservative.
By the way, this is the thing that, with this deal analyzer, you can actually run different scenarios. We show also for the long-term assumption, but also in terms of the value. If you think that it was improved just to 1.9, you can put the number and see how it impacts your metrics if the numbers still stack up.
Mhm.
Okay, then basically we'll go now to the mortgage section versus the cash investment. So let's say that we will get 80% loan to value. Now you can, so if it's a BRR strategy, let's say that you purchase a property and remortgage it, refinance it just after the renovation, then you can just tick this box. And then the amount that you can basically get will be based on the value after renovation. I don't know if this was the case or not, let me know, Hart, but basically, I think this will allow us to analyze the property for the long term, I think in a better way.
Yeah. This property hasn't been refinanced yet, but I would imagine it would be.
So let's say if it was not refinanced yet, it was like 80% on the purchase. Okay, so let's keep it like this. It means that you will need to bring a deposit of 240, but still the cash investment that you need to put down is higher because you need to fund the transfer tax and the improvement costs and the closing costs.
Yep.
All right, let's keep it 80. Mortgage rates are still around 5%, or if you want to be conservative, even put it 1.3, 1.4. Mortgage fees, I don't know what would be like. It's usually 2% or more, or
Depends if you're going with CMHC or not, but
okay.
yeah, we can throw that in as an example.
All right. Then property taxes in this area.
I would call it, I don't know, 1.5% would give us.
Yeah, and then basically,
No, probably, sorry, 0.5%. 0.5% makes sense.
all right. Then you have the monthly operating expenses. So it's great if you are going to use a managing agent, property manager, basically, here, and the platform will take it as a monthly expense over time. Landlord insurance, I don't know, it's 30, 50, depends on
Yep. Also, from a managing agent fee, let's assume Rent Panda is going to manage this one. It's about $240 a month.
240. So it's much cheaper.
Much less, yeah.
All right, good. So yeah, so you should use Rent Panda for that. I usually put on other monthly expenses like some kind of a buffer. It'd be $100 per month, just in case. So here basically you can see it's the analysis, 6% cash on cash. The ROI is, of course, is high because of the improvement of the value. Cap rate is great of 8.94. And then before I look at the long-term metrics, I will change the long-term assumptions. So you can click on the what-if scenarios, and then basically you have the standard, which is a moderate scenario. And here basically you have the annual property. First, you need to decide the holding period. So let's say if you are going to hold the property for 10 years, then the property appreciation, I don't know, the most likely I would say 3% a year, although now, like there also like decline in prices, but this will be like on the worst case scenario, I would say, appreciation of 2% and let's say inflation of 4%. Occupancy rate means that speaks about the vacancy of the property. So just for instance, when 92% means 1 month a year, the property will be with no tenants. I would say, I don't know what you think, Hart, 95 or 96% on the most likely.
Yeah, Toronto properties move pretty quick, so yeah.
Right. Then you can see that basically this will give you an IRR of 15.59%. So IRR means not just the net cash flow year over year, but also takes into account the appreciation of the property. and also the inflation, basically the costs inflation as well over time. Then you can also run a best case scenario and a worst case scenario. And worst case, I took it to minus, but perhaps even with the price decline, you can see what it will basically do to your long-term metrics. All right, and then, so after you review the metrics, you can go to the prospect report. And here basically you have a summary of the deal. You can export it to the PDF. This is also part of our premium plan, which you can benefit 30% off today. You can review, and let's review an example. So you will get basically a very well-designed report that you can share with others about this deal. And you can also share the analysis. So you can share it with anyone, just put his email address and the person will get a link to basically review the analysis on his Lendlord, on their Lendlord account, or they will need to create a free Lendlord account in order to review the deal. You can also export the numbers to Excel. So I would say very valuable tool, and especially these days, if you want to be conservative, if you want to see what will happen to the deal over time and to basically test it under different scenarios is a great way to make sure that you make the right decisions.
For sure. And just jumping in as a user myself as well, I think the what if scenarios are really powerful. When you guys added that in, it was quite substantial, especially when arranging with JVs, because you can create all these what if scenarios and answer their questions before they're asked, essentially, and paint the picture of the entire spectrum of the investment and what it could be. People can't predict the future, but if you've analyzed all the potential situations in the future, it was a lot easier to convince JVs about, investing with us for sure.
Absolutely. And then you can generate the report and share with them the numbers, and you can generate for each scenario. And soon we are going to embed the different scenarios into the report. So stay tuned. All right, good stuff. So now let's go to the next topic, stress test. So I will show briefly. Basically, you go to the manage section of the platform. On my portfolio, you click stress test. So this page basically is to predict the risk level, basically to assess the risk level of your portfolio if there are problems in the market in terms of rental demand. So let's see vacancy of some of your properties, or if you will need to reduce rent. I will tell you something. We developed this feature during the COVID period, because many landlords basically experienced problems with their tenants and their ability to pay rent. So basically, in order to see the status of the risk of their portfolio, they use this page. So basically, you just need to go property by property. The total monthly expenses, basically, we take them from the profit and loss page if you manage your cash flow on Lendlord, but if not, you can just enter the amount. And basically, the current rate is 1,200, but let's say that I will get only 900, or basically 900 because I take into account a period of vacancy in this property. Then basically I need to see the risk cover of this property. So the higher the number, it means that you have enough room because of the expense of the property. So even if the rent will go down, you are still okay. But also you can see the entire portfolio level. So it's not just one property. So you can see summary of your entire portfolio. And basically you just need to go, the exercise to go property by property. And then you can see the cover ratio of each one. If it's 88%, means that you are 12% down, and then et cetera, et cetera. I think this is a very good exercise, especially in difficult periods and things like that, just to understand your position, how much rental income you have in other properties that you can basically cover other properties if there are problems. All right, good. So now let's speak about placing new tenants in low demand. Over to you, Hart. This is basically your area.
Sounds good. So to the powers that be, I just can't share my screen at the moment. So if you enable that, um, I will say with that stress test, we are seeing a lot of landlords who are redlining on properties as part of a portfolio
Why not?
when perfect when they're in some of these smaller markets. And so we see landlords quite often say, I need to get X price on a property, and they'll hold and they'll hold and they'll hold and they'll sit on vacancy for a long period of time because in their minds that property needs to make X. And I think if more people used a portfolio analysis, mindset and the tool, they would be able to see that, they may not be redlining as much, or they could absorb some of those losses across the board. And we find that landlords end up selling their properties if they're not moving fast enough, and they make kind of emotional gut decisions when they should be decisions based on the data and the analysis. So it's exciting to see this tool. I think we're going to definitely push it to a lot of our landlords, especially in certain markets. And I'll talk about some of those markets right now. It's really important to keep in mind that it's not always going to be easy to place tenants. It's not always going to be easy within certain markets. But in the long run, real estate is still an amazing investment. My screen share is all good. Perfect.
Yeah.
Okay. So why should you even care about this, right? Everything in the news talks about how you can find tenants very easily. Rent rates are going through the roof. So just to dispel some of the myths here, the belief is that vacancy rates are under 1%. And some landlords say, I don't even need to advertise. I'm just going to put up my property for rent and my neighbors are going to hear about it and I'm going to find a tenant immediately. CMHC just released their data about 2 weeks ago. And across Canada, they do say that the vacancy rate is under 1.5% now. But CMHC only evaluates purpose-built rentals of 3 units or more, and they're highly skewed towards large urban centers. So the reality that we see every day is that many tier 2 cities, and these are cities outside of Vancouver, Toronto, Montreal, essentially, non-purpose-built rental vacancy rates are well over 4%. Those have come down a little bit. We're seeing some 3.5, some 3s. But if you're evaluating your property, understanding that the real vacancy rate for your property, whether it's a duplex or a triplex or a single family home, is likely around that number as opposed to the 1%. The other belief is that, there's thousands of tenants out there ready to rent my unit. I can throw it up on any system, on the MLS, on Facebook Marketplace, and there's going to be thousands of people that message me. And the reality is that few vacant units were affordable to middle income renters. And middle income renters make up the largest portion of the rental market. And this is even more true in these tier 2 cities. And then the staggering and shocking number is that the landlord tenant board cases increased by 27% last year. So people may be renting your place or telling you they can rent your place, but then they're going to hit tough times, or they're going to go into arrears, and they were planning to go into arrears. So you really need to be careful as an Ontario landlord specifically. Then the belief is tenants are willing to pay months up front and provide me all the information I ever wanted. You hear about MLS listings that go into bidding wars on the rental side of things. The reality is now 6.5% of all rental applications contain false information. And this is a staggering number. 2 years ago, this number was less than 2%. So there's been more than 3 times the amount of false information provided by tenants. There are now companies out there that will create fraudulent documentation for tenants and charge them for it. So landlords need to protect themselves. And then some people say, hey, I'm a passive investor. My property manager or real estate agent will find a tenant for me. And lots of people get into trouble hiring the wrong property manager or the wrong leasing agent or the wrong real estate agent. And as a passive investor, you should still know how to evaluate a tenant and how to place a tenant, even if you're not doing the work, just to evaluate your property manager or realtor. And I say that running a property management and real estate company where we want our clientele to evaluate our work. We want them to be scrupulous so that we can really show the value of our work, and together we can find amazing tenants. So why was 2023 a tough year? Lots of things happened over 2023, and really I present this to showcase how to do well in 2024, being conscious of the trends that happened in 2023 and are likely to continue into 2024. So one is longer vacancy periods. Again, the news isn't always telling the story. It's sometimes telling a downtown Toronto story. There was a 16% increase in average days on market across all of Ontario from 2022 to 2023. And that 34 and a half day mark is kind of staggering. A lot of people think you post your property and 3 days later, you've got a tenant. The reality is you should be budgeting a full month's vacancy if you're turning over that property, or you should start really early to advertise that rental. The second thing is that rent increases did not actually keep pace with inflation. So you hear these numbers of 8, 10, 12% increases in Toronto and Vancouver and Montreal. But when you look across the province and the entire country, the rent increases actually slowed to 3.5% or 3.3% in 2023. Inflation was 3.4%. So yes, rents did go up. Rent will continue to go up, but it's not going up as fast as the cost of living, the cost of your mortgage, the cost of your renovations, the cost of your life as a landlord. And so you need to be conscious of that when you're pricing a property, when you're looking for tenants. Then market saturation, and I'll jump into this a little bit more in a minute. But new listings remained at an all-time high. More and more investors are dumping their money into the real estate world, buying properties, renovating them beautifully, and putting them on the market. But the number of leased units decreased staggeringly at certain points of time throughout last year. So in some markets, there was actually an oversupply of rental listings, a drop in rent price, and that correction has not swung back the other way just yet. And I'll dive into this in certain markets. The next thing is fraud is rampant. Kind of already talked about this, but 6.5% of all applications that we saw were fraudulent. We actually partnered with Single Key to analyze the quality of tenants. And so that next point there is that the quality of tenants has definitively dropped. So the average rent to income ratio used to be 34%. It's rose to 37%. So there's less affordability overall. The average credit score has dropped from 687 to 675. That may not sound like a lot, but when you pull over 4,000 applications, it's a considerable drop when you look at the averages. And then the staggering numbers here, the average number of bankruptcies currently is at 4.4 or almost 4.5% versus 2.4% last year in 2022. And collections was up at 18.3% versus 9.8%. So this definitively shows that people are having more and more trouble affording their lives. And even when they're renting out a place, they're going to fall into trouble. They're having trouble with that car payment, with that cell phone bill, with paying back loans that they've got, whether they're student loans or, business loans. So you need to be more and more careful as a landlord. Again, not to be doom and gloom. There's still tons of opportunity, but you just need to be conscious of these trends. And then affordability continues to decline. The cost of everything is going up. The rent to income ratios are climbing. And in some markets, in some of these markets that are a little bit oversaturated, the high-end units that were renovated ground to a halt. And typically when an investor, buys the standard bungalow, turns it into a duplex, they're going to put all of the bells and whistles in it, all the nicest fit and finishes, the quartz countertops, the stainless steel appliances. And in some of these markets, there just isn't the high-end rental tenant that can afford these anymore. And so the middle income renters are being left in the dust. There's not a lot of available units for them. And so people are entering into leases that they can't afford essentially, and they knowingly can't afford them and they're going to struggle. So that affordability continues to decline across the board. Then if we look at specific market examples, this is where we're going to talk a little bit about, the true worst Ontario rental market in the last 5 years. So this looks at 5 years of data, and this is just a quick poll of 4 or 5 different markets. But the little bit of a scary thing that we saw in Q4 of 2023 was the sharp decline in total leased properties and the unchanged nature of the new listings on the market. So Hamilton here is a great example. You can see, over the course of 5 years, it was relatively consistent with the number of new listings and the total leased. And there is some seasonality to this, but things were relatively balanced, and the median rent price, was balanced because of that. Then in 2021, kind of as we came out of the depths of COVID, more and more people started to invest, and the number of new listings grew, and the median rent price grew, and the number of total leased properties grew with it. But then Hamilton started to see this trend where the number of new listings heavily was outpacing the number of leased properties. And then at the start of Q4 of 2023, you can see that very sharp decline. And that very sharp decline was not coupled with a decline in the number of new listings, which is the case in a healthy market. We see the number of new listings actually growing. So more people are dumping their listings on the market. More people have bought conversions, and their renovations are finishing, and they're putting their places on the market, and they're putting them up at quite high rent prices. So the decline in the median rent price hasn't changed that dramatically. And what we're seeing here is an oversupply. And if you talk to landlords or property managers in Hamilton, all of them are saying, all the good tenants have dried up. Where did everyone go? Why is my property sitting for 45, 60, 75 days? And this is why. It's because there is a true oversupply, and there's an oversupply at the top end of the market. So these investors who went into the market without doing their, best and worst case scenario, they said, well, it's all sunshine and rainbows and things are going well, and I'm going to be able to get the rent price, and I'm going to be able to find a tenant quickly. The reality is that has changed, and it's dramatically changed here. And so we're hoping that the little tiny, upturn in January of this year is going to keep going up, and the number of total leased properties will slowly start to catch up. But there's about a year of oversupply that's in the market right now. And so this isn't just an anomaly in Hamilton. If we go into Welland is probably our most acute market that we're seeing this problem. And so you can see that no one was really investing in Welland until mid to late 2021. And then all of a sudden, the market started to explode. And from moment one, other than a short period at the start of 2023, there has been dramatically more new listings on the market than the total leased. And there's some inflection points here, and you can see that the median rent price kind of tracked along. But when you get into 2023, again, you're seeing this dramatic oversupply of new listings without the catch up of the total leased properties. And so you can look into 2024 and say, unless there is a dramatic correction, there's going to be a drop in rent price because these properties have to move. Investors are going to redline. They're sitting on vacancy. They're going to have to drop their price if they want to move their property. Or there's going to be some opportunities to buy some cheap properties that have been fully renovated because people just can't afford the mortgages anymore. So maybe some opportunity, but definitely something to consider if you're looking at these markets, if you've got rentals in these markets. And it continues. You can look at Brampton and it's almost the same story, slightly different, but you can just see here a dramatic oversupply in these number of new listings. The rent prices are starting to come down, but the number of total lease properties is not catching up. And so it'll be very interesting to see what Brampton does over the next quarter in terms of the total leased properties and the median rent price that we see. Oshawa is another great example. This has been a very large rental market just on the outskirts of Toronto. And you can see here again, it's an even more consistent and dramatic decline in the number of total leased properties without any change in the number of new listings. And the median rent price hasn't really dropped yet. It's dropped a little bit, but investors are being stubborn. They're holding their rent prices. They're just not leasing their properties. So that's going to have to change at some point. And then probably what everyone is waiting for is the GTA numbers, because everyone is still Toronto-centric. But the GTA is experiencing this. Thankfully, the masses of immigration into Toronto and the salaries and the affordability being there with core groups in Toronto helps it a little bit, be a little bit more, standard and less dramatic. But you can still see here across 2023, especially Q3 and Q4, you've got the drop in total leased properties. You don't have the drop in the number of new listings, and you have that rent price starting to come down. And so one would assume that in 2024, we're going to continue to see a little bit of that decline. Hopefully the spring market, we see an influx of renters coming back out, an increase in affordability. The total lease properties will hopefully catch up. We're seeing a little bit of that trend right now in the GTA. You can see there on the very last bar. But this is the trend that has happened that the media is not talking about, because it's not a sexy story. It's not something that you can plaster across headlines in terms of, crazy slumlords or crazy high rents or people not, being able to afford places and sleeping on the streets. This is the true story of a lot of smaller markets in Ontario, and where the majority of our clientele and the majority of, rentals occur outside of Toronto. So all of that to say, we're in a different rental market than we were beforehand. And finding tenants needs to adjust as well. It's not about posting your property on Facebook, getting 1,000 messages in your first day, and finding an absolutely stellar tenant who will give you all the information under the sun to make a decision. So these are just 6 little tips that we've experienced and we've honed over the last 3 to 6 months in the tighter market. So the first one is about knowing your product and knowing your customer. Too many landlords jump into the market and they go, well, I've got a 3-bedroom home, anyone can rent it, and it's good for everyone, and I'm just going to choose the best person in terms of income and credit check. And the reality is, a 4-bedroom home in Oakville is very different than a 1+ den in Mississauga. You will attract different people, and you need to think about your property as a product, just like a running shoe or a tennis racket or a car. It's a product that will attract a certain customer. And so understanding what that customer is looking for, how that customer interacts, what time of day that customer searches for a product, it's all going to influence how you advertise your property, how you engage with these people. And you should really know your customer and put yourself in your customer's shoes. And then also know yourself as an investor. If you're an investor that has a 1+ den in a student market in Waterloo, and you're not comfortable renting to students or new immigrants or Google employees for any reason, you need to understand that and be frank with your biases and choose the tenant that's appropriate for you, especially if you're self-managing that property. So know yourself, know your product, know your customer, and think about yourself just like selling any other product out there. The second piece is keeping an eye on your competition. So in a market that has the volatility of some of these markets that we just looked at some point, there is going to be the landlord that drops their price. So if 20, 30, 40 people have the same 1-bedroom condo in downtown Toronto, and maybe it's in the same building because you all bought the same pre-con purchase, and occupancy drops on the same day, that person who drops their price by $50 or $100 or even $25 is going to be the one who gets their property rented out immediately. If you think about 1,000 tenants looking at 100 properties, a $5 difference and a $100 difference, a first month's move-in incentive, that's what's going to move a property. And then the entire market is going to shift. And so we often see this where 60 units in a condo building drop on the market on the same day. They all will get listed at 2,500. And the first one to drop it to 2,400 gets it rented out immediately. And then everyone drops to 2,400. And then, a few more will get rented out. And then the next person will drop it to 2,375. And that one will get rented out immediately and everyone will come down. And this will all happen in the matter of hours or days or sometimes weeks in smaller markets. But you need to keep an eye on your competition as it relates to you. From a pricing perspective, first and foremost. And so lots of landlords will just post their property and not really look at it after that. They'll just be managing messages and they're never really looking back at comparables. They'll sometimes look at it before posting the property, but definitely not once it's been posted. And so keeping an eye on that on at least a weekly basis is really important. And when you are listing your property, you need to look at the competition to see what they're doing in terms of, video content or photo content, obviously pricing, whether they're offering incentives, are they showcasing something that you're not? And looking at your true comparables from the eyes of that customer, that potential tenant, what are they going to be attracted to? So put yourself in that shoe and know who your competition is. And then the third thing here is to be creative in your marketing and pricing. So Welland is a great example where nothing was moving in Welland for us in Q4. It was just an incredibly slow market. There was lots of angry landlords. Of course, they were blaming us for not doing our jobs and renting the properties out. There was just, not a lot of movement in the market. And we had, landlords that didn't want to move their price point because they had their numbers that they had to hit. And so looking at their bottom line and saying, hey, instead of dropping your price, let's do a move-in incentive. Let's do a 2-month rent discount. Let's give people Visa gift cards. I think there was just an article in the CBC about a developer giving away a Porsche with the purchase of a new condo, right? It's all about a marketing spin. And if you think that you are a purveyor of a product and you're selling that product, well, if you can't drop the price, then come up with a promotion. Be creative. We posted a property at $1 to incentivize people to come forward and actually put bids forward, which isn't really common in the rental industry. When properties were not moving for 60, 70, 80 days, we had to figure out something creative to get some movement on that property. And sometimes it's just a creative marketing spin or a pricing spin, but think creatively when you're advertising out there. And then the fourth bit here is probably the most important. It's just one point, but it's about adjusting your systems to reflect the realities of tenants these days. So first and foremost, there should never be an excuse to not use all the technology out there to both analyze your property as well as evaluate your tenants. And there are systems where you can pull credit checks and background checks, whether you use Rent Pandas or Single Keys, and we're actually partnered with them, or any other credit and background check provider. Never trust documents provided to you by a tenant. If you think about 6.5% of all the applications you're going to get are fraudulent, assume that every single application is fraudulent, and build a system where you can pull all your own information and be 100% certain that there is no fraud being in any of the documents that you've got in front of you. So you can pull credit checks, you can pull background checks. In markets that have higher demand, people are going to be more willing to provide more information. So you can actually do income and expense verification through open bank checks now. So you don't even need to call employer references, because through their bank account, you can actually see 12 months of payroll deposits from the employer. So you can get that level of transparency now, and you don't have to be left with trusting bank statements or trusting pay stubs. You can still get them to correlate things, but you shouldn't just rely on them. You can do ID verification, and we see a lot of ID fraud these days. There's now Canly and Open Room that you can check to make sure there's no judgments against any past tenants or applicants. Scraping social media, making sure you check landlord references, but you can cross-reference Geo Warehouse. And if you have a realtor friend, and everyone has a realtor friend, you can check Geo Warehouse to make sure it's not cousin Jimmy pretending to be a landlord. So there's tons of digital tools to protect yourself as a landlord and really reduce that risk of a non-paying tenant, a tenant that's causing damage. And these tenants that are providing fraudulent documentation aren't always malicious, right? It's just sometimes people that can't get approved. Maybe they have a little bit lower credit score, maybe they're new immigrants, but they're having trouble getting approved, and someone has convinced them that this is the leg up. So you need to make sure that you have the fully transparent view of these applicants coming your way. Next is being on the ball. This one is super simple, but think about your customer and when they're interacting. And so if you're on Facebook Marketplace and you post a listing, and every 3 days you get back to people, you're going to get tons and tons of drop off. You're not going to get much conversion through to applications, because if you think about a tenant, you're probably sitting on your phone at 9 o'clock at night, scrolling and applying to all of these listings. So as a landlord, if you're on your phone scrolling and responding to those messages, you're going to get more conversion. So be on the ball with responses, be on the ball with setting up showings quickly, be on the ball with providing applications and being very definitive with what your system is and pushing people through that system. And so being on the ball will really help conversion when you finally do get that great applicant coming forward. And then the last thing is, when in doubt, hire it out. If you are too busy or don't know what to do, or are scared, or have extremely low risk tolerance, or just hate finding tenants and managing them, there are lots of services out there to hire it out, to hire some of that system out. And whether it's Rent Panda or many other providers out there, make sure that you do your due diligence, you understand how to do it, and then you can hire it out. Don't just trust anyone willy-nilly because you don't want to do the job. So this is kind of the quick 6 tips on how to find tenants in tough markets. There's a hell of a lot more to go through, but I'll stop there. And Aviram, if you're cool with it, maybe we'll open it up for questions.
Yeah. Great tips, great presentation. Thanks, Art.
Awesome.
All right, guys. So if you have questions, feel free to write them on the chat and we'll answer, or just raise your hand. Ali, you raised your hand before. I don't know if it's still relevant, Ali. So you can just unmute yourself and speak. Also, Rose. Try now. Rose.
Yeah, I have a question.
Yeah.
So for Rent Panda, for regular tenants, if I even go online, I don't see any postings. So it's kind of bizarre.
So if you go to tenant portal
Yes.
at the very top of the page, you'll see
Yeah.
listings. And I would say that, from a marketplace perspective, we don't pretend to be the biggest marketplace at all. When we do leasing and property management, our leasing specialists actually post out usually across 5 to 7 other platforms. So we post on Rent Panda, but we don't rely on Rent Panda, because when we think about the tenants and putting ourselves in the tenants' shoes, The tenants are on Facebook Marketplace. They're on local Facebook groups. They're on Kijiji and rentals.ca and Zumper and Padmapper. So we want to be everywhere. Rent Panda is just another marketplace you can post on. Yes, we have some added value tools like screening and lease building, but we don't pretend to be the largest marketplace out there. 8 years ago, I might have said that that was the goal of the company. But when Facebook came into the rental marketplace space, we said, you know what, we're not going to fight them. We're going to work with them and provide added services above and beyond.
And Zumper and Padmapper, isn't it the same?
The same as Rent Panda, or
no, I
the same
mean
as...
it's the same platform.
So Padmapper is an aggregator of other listings, whereas Zumper has native listings of their own. But a marketplace is essentially a marketplace, right? If you're on Facebook Marketplace, rentals.ca, Zumper, Kijiji, they are all slightly different forms of marketplaces where you can post a property and tenants can search your property.
Mm-hmm.
Yeah. I would say the one tip there is if you are a landlord posting your property on any platform, and we do this from a leasing perspective, most are a pay-to-play world these days. So you can post for free, but you're not going to get much traction with a free post unless, you know, you are underpriced and everyone's going to come your way. So when we post out across these platforms, we usually allocate between $200 and about $500 in advertising to promote posts, to get them to the top of the page, to buy impressions on Facebook. So it's really important to think of it like a business and to set aside an advertising budget.
Mm-hmm. And another question regarding evictions. You didn't touch on that. So do you deal with evictions, or how does it work?
Yeah,
or
so we
throw it back to the landlord?
No, so when we're property managing a place, we deal with the evictions holistically. We have an on-staff paralegal, and we can take it through from your first N4 for non-payment of rent through your L1 filings and representation at the LTB. When we're doing leasing work, we can bring in our paralegal to help out. And for other work, we partner with a few paralegal firms in the province for any extraneous work. So we can either do it ourselves or relay you to someone who can.
All right, thanks, Rose. We have also Vera. I will let you to speak. If you want to ask, Vera.
I just want to say that you rented out my condo, and I am very happy with what you've done. I was extremely pleased with the tenant you found, and it was done like super fantastic and no stress. Thank you. I definitely highly recommend you.
Awesome. Thank you, Vera.
It's great to hear. Ali asked on the chat, thanks for the presentation. Is Rent Panda provide any kind of support to landlords, such as legal services, in case the tenants stop paying rent, assuming landlord is your customer from the beginning?
Yeah, so pretty similar to Rose's. If you're a property management client, we're going to support you throughout. If you're a leasing client and we've placed a client that has, or placed a tenant that has non-payment, damages, disputes with other tenants, noise issues, things like that, we always want to build relationships. So we would jump back in, we would offer aid, if it was pre-paralegal support, and then we also have that paralegal support if need be.
All right, good, thanks. Hart. Okay, guys, if you have any other question, feel free to put on the chat. Just to remind you, you have a special offer if you sign up to Lendlord today, 30% off our premium plan. You have the link on the chat, and if you already have an account, just go to the link /premium, click add coupon, and put Rent Panda webinar. So yeah, I think we can call it for today. Thank you very much, Hart, for joining us. The recording will be on the YouTube, and we will send you also an email with the recording link. And thanks everyone for joining, and enjoy your weekend. Thank you very much.
Awesome. Thank you.
All right. Bye everyone. Bye.